it's been totally honored to host Manish sir, Sushil Kedia ji, and maybe in some time Rohit will also join for his quick take on the market. And to be honest, normally you see me very confident and with my views and with my whatever I speak on Twitter, on whatever the social media platform we use to interact with you guys. But I am today a little nervous because one of my idols, and you can say my one of the few people I really admire, is with us, Mr. Manish sir, and thank you so much, sir, for being with us and taking out your time, precious time, to speak with us, right? So to start with, sir, I want to congratulate you for getting your call right, which you gave on Muhurat Trading Day on various media platforms by saying that Nifty will not give more than 10% return in financial year 2022. So from there on, the market is almost at the same place, right? Mid cap, small cap, CNX, IT, Nifty, everything is at the same place. So what is your current take on geopolitical tension and inflation picture globally right now? Because US inflation is running at 7.5% right now. So what is your current take on that and geopolitical risk we are facing now? Please, sir.
Sure. First of all, Prakash, thanks for very, very kind words. And as I was telling you, and you asked me to join, can you hear me?
Yeah, I can hear you, sir.
Hello. Yeah. So as you know, I was chatting with you, earlier today. I said I feel like how Sunil Gavaskar is being called to discuss how Virat Kohli and Rohit Sharma are playing. So
no,
you all
sir.
are the leaders now, and you all have better
No,
thoughts.
sir.
So,
you are the guide and you are the real force. Yeah.
So what I'll just try and share is, see, there are different people who have different time horizon of investing, and I know a lot of your followers are marveling at the fact, like I believe today you had told that on Tuesday the market will bottom out. And
yes,
you had said this last week when even the Russian president didn't know whether he'll withdraw on Tuesday or Wednesday.
with folded hand. Yeah. I'll take this, but you know how this works. Yeah.
So in my case, it's like the clock, which is right at least twice in the day. So
yeah.
maybe that call which you are referring to.
Yeah, absolutely. That kind of a call for sure. Yeah.
but it's more like I come from the more fundamental school, which I was trained by, of course, Vallabhbhai and Nimishbhai. They said if you stay focused on the company, and if the company does well, like Mr. Buffett says, in the short run, it's a voting machine, but in the long run, it's a weighing scale.
Correct.
And the weight of profits always tells. And just to give an analogy, which I think people will understand and follow, that if, for example, NM Group had thought about geopolitics and, we had even got banned by the USA in 98 when we burst the nuclear bomb, they would have sold their Infosys because of geopolitics and inflation and so on, and not created tremendous wealth. Same way, if you think of Rakeshji holding on to his Titan and creating such enormous wealth, if they had thought a lot about these macro factors and volatility, then when you get something very rare and unique, then you can become a very, what I call convinced investor. And for that, you need to know that business and its rarity very well. And in a similar way, even like whatever may happen in US, that, say, an Amazon is a very rare business or a Google is a very rare business. So whatever happens to market, you all have followed, I presume, also Kathy Wood over there.
Yeah.
80% of her stocks may be down by 50-60%.
Yeah.
But it doesn't mean that a Google or an Amazon has collapsed.
Correct.
So one is to have a general view of what the cycle is, the economic cycle and market cycle, which I'll share in a minute. But I think the more important view is what is it in my portfolio and the company that I own, and am I willing to part with it or I'm willing to buy it? Very much like it would be if you were holding your own flat and someone comes and tells you कि अभी US में बहुत crisis है, आपका flat का भाव 10,000 रुपया square foot हो गया है. You are not going to sell your flat because you know it's valuable.
True that.
And
True that.
equally, if someone gets excited and he comes and says, now your flat is worth 2 lakh rupees a square foot, you will say, okay, I'll accommodate you. I'll give it to you today.
True
So
that.
it's that sort of period where, because we have all made unprecedented gains over the last 2 years, and
Yeah.
we know that the prices are a bit ahead of reality and the profits have to still catch up. Therefore,
Yeah.
there is this nervousness and volatility. Honestly, if the prices were low, whether Russia attacks Ukraine or doesn't attack, we wouldn't have bothered about it, right? So,
Absolutely agree. Yeah.
and just to put that in some context, that it's very normal in a market cycle that first the stock market goes up, anticipating what is going to happen, then the profits follow, and
Yeah.
the economy and interest rates and inflation follows the profit cycle, because only then the central bank can put up interest rates to try and
Yeah.
slow down the economy.
True.
So while the US may be at a different stage of its cycle where they've had tremendous profit growth in the last 10 years and they are now facing inflation, we are only beginning our cycle where the stock market's gone up, but company profits are yet to come in this year and the next year. We will
Yeah.
get tremendous earnings growth, and
Yeah.
market has to digest that earning, and from there we will take off. And it was
Ab-
in that context I had said last year that the markets have already gone up a lot.
Yeah.
Profits have to now follow in this year, which we are currently sitting in 22, 23. And once that profit comes, then we are ready for the next leg up. So that's sort of where we are now. That's how I would think. I hope that's useful to you.
Yeah. Yeah. Excellent. And that's really insightful, sir. So, so, and the second question is, where do you see Nifty earnings in next 2-3 years, right? So right now, we have a earning forecast of around 750 rupees, 780
Right,
rupees for FY 22-23, right?
right, right.
So where do you see like the similar compounding of 10 to 14% kind of a run rate, or higher than that? What is your overall
Uh,
earning base case? Yeah.
yeah, so actually the earning growth is going to be much higher than I think people expect, because analysts end up following the curve. So when the earnings were going down, they were getting it wrong and we were getting earning downgrade. I think we are in
Absolutely.
an upgrade cycle now. And
Yes.
there are two reasons for that. The number one, I don't think anyone anticipated the enormous strength in metals and commodities. And when,
Absolutely.
for example, a Tata Steel swings so massively from a loss to a profit which exceeds the whole cement sector,
But
or a Tata Motors swings.
you saw that coming in 2020. I remember your
Sure,
call on metal. Yeah.
sure.
So I remember that. Yeah.
Right. So,
Yeah. Yeah. Please.
so if you think of our Nifty, see, there's banking and IT is basically half of the Nifty, and 10% is Reliance. So
Correct.
if you get these three right, 60% of what is happening in the market. There's certainly the IT sector is having the best period of the last 10 years in terms of earning. I'm not commenting, their valuations are of course pretty rich now,
Mm-hmm.
but banking is due for a massive, massive run, all the financials, because they are coming out of deep cleanup, and as rates also start rising, their NIMs will rise. They'll have operating leverage, so profits can explode in the banking space.
Okay.
And metals you have already seen, and I mean metals. Honestly, no one can tell you what will happen, because China starts producing and shipping out. They may
Mm-hmm.
correct it, because it's not like there's shortage of capacity.
Mm-hmm.
And even the experts in metal, for example, I remember Vedanta was trying to take the company private,
Mm-hmm.
and their bid was at 160 rupees.
Mm-hmm.
And if they knew what is coming, they would have probably taken it private at 220 and 240 even. And
Now
today
it's
here we are sitting at 360.
correct.
People are predicting it's going to 500. So if the owners also don't know, who are we to give a call on that? So it's that. But certainly Nifty looks. I mean, the not only Nifty but the Indian corporate sector balance sheets are in great shape. Banking sector balance sheets are in great shape.
Yeah.
And the earning explosion of operating leverage lies ahead of us. So
Yeah.
I'll be very surprised if earnings don't surprise on the upside. And that's
Okay.
why the following year, one would expect that the market actually lifts off even further from here.
Hope it will help our audience a great deal, right? And sir, any preference here between private and PSUs? Any preference? I'm not looking for names, right? I'm not going to talk about.
Yeah. I mean,
And one important disclosure: Inam and Manish sir is a very serious player in the market, right? So we will not talk stock specific here, because me and Manish sir may have a serious position in that particular stock. And whatever stocks, even we are taking names, that is for just for example purpose.
Illustrate, yeah, and
Yeah. So
and
it's a proper
absolutely,
disclose with lots of pinch of salt, and we may be biased towards that sector or that particular stock or the company, right?
and like I said in the beginning, I am,
Yeah.
like a clock. You can be right 2 times a day,
Yeah.
at 12
Yeah.
noon and at 12 midnight. For the rest of
So
the day, you're wrong. So assume I'm wrong and go on that
no, no, sir. That you are too humble,
So
right?
I'm
So
just sharing. I'm just
uh,
sharing how I think about it.
so that
And and
the
and
day I'll become 1% of what you are.
not no, not at all.
Yeah. So
You're yeah.
yeah,
So
yeah. So
but
you are too
see,
humble, but yeah. But again, for the disclosure purpose, right?
yeah.
Because
No, that's right.
we want to help people out here, and we
Yeah,
don't want to get ourselves into trouble. So we are
yeah.
talking just for the example
Absolutely,
purpose.
yeah,
Yeah.
absolutely. And we have and
And
have
then
no
we
business. There's no
yeah,
business. Have no
yeah,
interest whatsoever.
yeah, 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 yeah.
I
I know.
just invest now for myself, and I'm
Yeah,
relaxed in life.
yeah, I know. And
So yeah.
yeah, yeah, yeah,
Uh,
yeah,
so, but like I said, I would expect, I mean, in the normal course, the entire banking space to do very well. And again,
yes,
depending on your risk appetite, the better run banks obviously are the private financials,
yes,
but the very, very cheap, public sector banks are there, and they've all got cleaned up very massively,
yeah,
and they are available. They've even performed very well over the last year as well.
yeah,
But
yeah,
the gap
absolutely.
was so large that there is sufficient scope in all of them.
Yeah,
So
on the
again, if a country does well,
yeah,
it's very unlikely that the financial space will not follow. And like
correct,
we had them in the leadership space till the 3 years ago, 3 4 years
hmm,
ago, and then in the
absolutely,
previous cycle they didn't really participate. Like if you think HDFC or Kotak, which were the best owned banks, they didn't really perform. It was the other banks which took up leadership,
yeah,
and also extending from what you call the corporate banks to then the PSU banks. So it's like a relay race where
yeah,
different sectors will take leadership at different points. But certainly, this doesn't look like the end of this market cycle to me. So, in that context, for those who can afford to stay invested for a longer time, you shouldn't get scared out with what's going on in the rest of the world.
yeah. Thank you, sir. That's really insightful. So, guys, Manish sir is just saying if you have a time horizon of 3 to 5 years, or maybe 2 to 3 years even, right?
Right.
Banking is the one space where you can seriously allocate some money, right? So let's say you have 100 rupees, you can allocate 30-35% in banking or even up to 40%, right? And you can make serious money, and you can look for top private sector financials, start top four, right up there, right? Start with HDFC Bank, which is trading at I think around PEG ratio of 1.1, which is quite cheap, and the growth run rate is around 18-19%, and roughly
Yeah.
your price to earning and whatever the price to book is quite cheap as of now. And then similarly ICICI Bank, and in the PSU basket you may look for the valuation wise Canara Bank or Union Bank, maybe. Just
Yeah.
for the
So,
example purposes,
yeah.
yeah.
So Prakash, I'm not taking any names, and
So
by
I'm
no
just
means, yeah, yeah, yeah.
I'm just
So,
talking about the valuations. So
absolutely,
here the valuations are quite cheap and attractive.
right.
We don't know the targets, we don't know the downside risk.
And
Here the valuations are, yeah,
and I'm very conscious of the audience may not be people who are regular in the market. So
yeah,
please,
yeah,
first you get your asset allocation right. Keep
right,
money
yeah,
aside. That assume 2 years the market doesn't open. You should not be stuck that where will I get money from, and you get
yeah,
panicked out at a bad day.
yeah,
So
yeah,
keep
yeah,
some sufficient cash.
yeah, yeah,
Put only that much in the market that you can afford, and within that, make a difference between different sectors. So even if I know 110%, if this one stock is going up, I may buy only 5 or 10% of my portfolio in that. I don't go crazy in that. So
yeah.
please
Just
don't go crazy on anything.
yeah. So normally what we say, like even if the promoter is your friend,
Yeah,
don't trust him beyond a point.
sure.
Yeah, yeah. So thank you, sir. That's really informative. One important call I want from you is you are among the top people in 2020 who called this commodity cycle or metal cycle absolutely right. I can easily recall that interview you made with CNBC, right? With I think Lata, if I remember right, and you said it about the valuation of steel stocks and other stocks, right? What is your broader take now, right? Without taking any names, what because the stock has already gone up 600%, right?
Right.
Some of the aluminum stocks has gone up 500%. Some of the metal
Right.
steel stocks has gone up 5, 6, 700%. As you said, Tata Steel and all, right? So what is your current take now, right?
See, it's very different when you're buying at half time book value and half of replacement cost.
Correct.
And like you rightly said, the prices have gone up significantly. But it's
Mm-hmm.
also a reality that if indeed this, China supply, which is a lot of surplus in the world, stops coming for variety of reasons,
Mm-hmm.
and the fact that there's been such a big move of ESG, where
Mm-hmm.
people are not financing them, banks are not lending to these kind of companies to go into mining and all of that.
Mm-hmm.
So there is going to be some shortage of capacity, and it seems that the table, which may have
Mm-hmm.
been, say, for aluminum, would have been, we would have maybe
Mm-hmm.
taken a 1800 range, or you
Mm-hmm.
would have taken a $600 range for steel. The
Mm-hmm.
ranges only seem to have moved up, to a new plateau. So
Mm-hmm.
on that basis, but again, like I'm saying, please, these valuations are not certainly cheap,
Cheap,
and
yeah.
commodities are such that even the owners don't know what will happen in next 3 months. So as long as
Absolutely.
you're getting a cheap commodity producer and you're betting on volume growth, and if
Mm-hmm.
price rise comes, then that's an extra bonus to you. But be a little, while it's a very very bullish space in that sense, it's not
Mm-hmm.
crazy value, but it's not having gone up 4 5 times. It needs time to digest on move. And if you see, they've all kind of not been moving since almost December.
Mm-hmm.
So even while,
Absolutely.
we keep reading, these prices are going up of the underlying commodity, the stock prices have not been keeping pace over the last 2 months. So just
Absolutely.
please, 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 3 times I'm saying, please do your own research,
Yeah,
and
yeah.
consult
No, no, no.
whoever you work with to take your call there.
No, no, our audience, I can assure you, our audience is like, very, hardworking, and they do their, homework before investing.
Right,
And we also advocate that we don't do spoon
right.
feeding. We
Yeah,
always say,
absolutely.
yeah, you see the data, you see the
Yeah,
numbers, and then you take your own call. So
absolutely.
that's really insightful, sir. And what is your general advice about this new fintech and companies or consumer tech companies that, like, without taking any names, about the
See,
valuations and forever loss making companies? Yeah, forever loss making companies. Yeah.
it's again, it works for very different people, and like you said, there is someone who can, uh, how you say, they are value investors, they are growth investors, they are momentum investors, they are day traders. That's why we have a market where there's people buying and selling.
Yeah.
And the venture capital business works on the basis that we buy 100 stocks,
Yeah.
and two or three of them will go up 100 times, and they will take care of the losses of remaining 98. That's
Ab-
not the school which we came from of Warren Buffett, which says you don't want to lose money, rule number one. And rule number two, don't forget rule number one. So when
yeah.
you're buying stocks on multiple of sales of 20, 30, 40 times, it's very hard. Like someone has, I think, put out about Twitter itself, that from the time it came public, the stock has never ever produced a return because it came out at some 50 or 60 times of its sales. And I
Oh my
believe it
God.
now sells at 4 times of its sales. So
Mm-hmm.
valuation is everything. And like I said, the weight of profit is the ultimate determinant. You can't, no one will support a indefinitely loss making stock.
Mm-hmm.
And you need the weight of profits to come. And if you don't see that, and if you don't have that horizon of 5 or 10 years through which they are playing, then certainly it may not be the right investment for you. And I just say one thing, see, investing is like a season. So when there was a crisis in 2020, the
Mm-hmm.
government comes and puts a big fiscal stimulus. The central bank comes and cuts interest rates and floods liquidity. So
Mm-hmm.
that's like once in a decade or once in a lifetime, you get that kind of support from the regulatory side, correct?
Correct.
And if you have bought at that time and now you expect the same support will continue forever, it's not going to happen, because now you know what lies ahead of me is rising interest rates and rising taxes and lower
Mm-hmm.
liquidity. So what valuation one could have got for that same company 2 years ago, you
Mm-hmm.
will not get it 2 years hence. So the
Absolutely.
multiples are only going to decline. They're not going to go up for these businesses. So you have to
Ab-
play on that basis, that you're basically taking a bet on explosive earnings growth. And there are not too
Absolutely.
many companies which have done 20, 30, 40% compounded earning growth for 10 years at a stretch.
Yeah.
So you can't generalize, but if you are one of those two, like I said, if you have been the Google or you have been the Amazon, That's a different category compared to, say, if you were, say, the Zoom or the Twitter.
Absolutely.
So again, whatever you're looking, the Zomato is very different from Nykaa, and Nykaa is very different from, car trade. So I would not generalize there.
So
Each one of them has their own model, and one has to study each one and decide for yourself what value makes sense.
absolutely bang on, sir. That's really insightful. So, what kind of general advice you want to give to the people who came after COVID, in let's say after 2020, that March crash? What a kind of general advice you want to give, like some homework, or this is the basic you need to do to survive or make some kind of a money into the stock market? General
No,
advice.
no, my general take is this, and that's why I say I feel like I'm from the era of Test cricket, and nowadays it's T20.
So,
Because
yeah,
just to put in some context, that see, valuation in our time used to be on the basis of tola and vajan of profit, and now it's becoming a lot more faith based. So there are
right.
enough people who believe in dollar while they are printing enough dollars, and I'm not a believer of the value of the dollar or the pound sterling, for example, which should be the currency to fall,
Mm,
whereas we seem to be accumulating it. So as long as the world is believing, and they're not saying the emperor is naked, these fellows are able to continue printing currency and holding their currency values up.
mm,
Same way, there are enough people who believe in gold, which never produces any cash flow. But in India, we buy $75 billion of gold every year. So same way, there are enough people who have started believing in cryptocurrencies, which, like the RBI governor said, it's equivalent to a tulip mania. It
mm,
may have nothing underlying.
mm,
But as long as enough people believe, it's become like, if enough people believe there is Jesus Christ and enough people believe there is Bhagwan Krishna, that religion continues. So investing seems to be moving in that direction.
yeah,
And if
absolutely.
enough people have faith in something,
Yeah.
it continues to go up. So I'm not used to seeing 100p stocks and multiple of sales of 60 and extending for 1, 2, 3 years at a stretch. So it seems there's a younger population out there. There's a lot of easy money out there. But everything is, like I said, it's a season. So the flood
Yeah.
of liquidity which was unleashed may not always continue. And like there is summer, there will be winter, and there may be spring and autumn in between. And that's what constitutes the fun of this market. That you
Yeah.
have to play according to what you understand and understand which season you are. And to
Yeah.
use the cricket analogy, is it a seaming pitch? Is it a bouncy pitch? Is it a spinning track? You play according to that pitch. So I'll just pause at that and leave it. I know you have other speakers,
Yeah.
so let's just
So,
get back on track.
yeah, I would like to thank host you often, sir. Yeah. So, and we'll try to conduct more